Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. Happy Wednesday. These are the stories that set your agenda. Stocks remain on the back foot after a sell-off that's wiped $1.6 trillion from global equities. We're going to preview today's earnings from Nvidia for a health check on the AI boom. President Trump described Saudi Arabia as a major non-NATO ally as the Crown Prince makes a vague pledge to invest $1 trillion in the US. Plus, with UK inflation expected to ease, we're going to look at the implications for the government's budget due 7 days from now. And we will be live at the Bloomberg New Economy Forum in Singapore, speaking to guests, including Euroclear Group CEO Valérie Urbain. So a rough day for stocks yesterday. The sell-off, of course, pronounced on the Nasdaq 100, down more than 1% by the close, a loss of 0.8% on the S&P 500. European stocks closing low by 1.7% yesterday. Today, though, the equity markets, yes, they're slightly on the back foot when you look at the US futures picture, but there is a sense of modest stability that is percolating through these markets. Just in recent minutes, in fact, European futures now modestly in positive territory, but again looking for that catalyst, and that is likely to come from Nvidia. Of course, the earnings dropping later, and we'll cross and bring you all the details in terms of the preview and the run-up to that event through this show. FTSE 100 futures currently pointing to gains of 0.1%, but US futures still in negative territory. S&P evenly down 0.1%. Nasdaq 100 futures looking to drop 55 points. Let's flip the board and have a look cross-asset then. Treasury markets, the last time I checked, relatively stable. 411, there you go on the benchmark US 10-year, unchanged so far in the session. Euro dollar at 115, just a little stronger by 0.1% on the single currency. Bitcoin had crossed back below 90,000 just a minute ago or so. Now just holding above that level, but under pressure again today. Down 2.3% for the cryptocurrency. And Brent also, oil prices under pressure, $64 a barrel and 71 cents, down 0.3%. Reports of inventories building up in the US. Let's cross over to Asia right now. Check in with Winnie Su in terms of how the Asian markets are faring. Winnie standing by in Hong Kong. Winnie.
Yeah, morning, Tom. It seems like Asian markets also under a bit of pressure today for declining for the fourth day, and its longest losing streak since August. And here it really is that nervousness ahead of Nvidia's earnings, as that's going to give us more direction in terms of where this AI outlook is going to be, especially when we already have so much concern around the valuation for technology shares. And hence, yes, we're seeing lots of pressure on technology names today, specifically with the Kospi down about 1%, and that is inching closer to that technical correction level. And another market that we're closely watching is the Japanese market. And we flip the board and take a look at the Japanese bonds, because we just had that 20-year bond auction today. And here you can see that the auction results actually came in line with the 12-month average, but it's not particularly strong, and hence yields remain elevated. You can see that the 20-year bond yield and also the 30-year bond yield still around that highest level in more than 2 decades. And it really goes to show how investors remain very cautious in terms of Takaichi's fiscal expansion policy and ahead of her first economic plan expected to be announced later this week. Now, another thing that we're really closely watching is that development when it comes to the relationship between China and Japan. Now, we take a look at how markets are reacting, because here it's a very clear picture when it comes to the seafood stocks. You're seeing top 2 stocks from Chinese seafood companies jumping while the Japanese ones are falling. And this is coming after the Japanese local media said that Chinese government is now going to ban Japanese seafood import. And it's also coming after how the Chinese officials are saying that they didn't have that much of a good conversation with the Japanese diplomats. So around that front, we are still seeing geopolitical risks between the two countries quite elevated. Back to you, Tom.
Winnie Su in Hong Kong, thank you very much indeed. So the S&P 500 down more than 3% this month, with volatility also at its highest in a month. Bob Diamond, the former Barclays CEO, who now runs Atlas Merchant Capital, says the market movements are nothing out of the ordinary.
We've seen risk assets be repriced. In my sense, this is a healthy correction, not something that's turning into a bear market.
Let's bring in Bloomberg's Valérie Teitel now. So, Val, the debate continues. One voice there, Bob Diamond, suggesting that this is not something to be overly concerned about.
That's right. We're hearing voices from around the world, these market participants wanting to weigh in on whether what we're seeing is something that can be continued into a steep correction or if this is just a healthy clear out of risk sentiment ahead of year end. We are starting off this Wednesday again on a shaky footing when it comes to U.S. equity futures. Those NASDAQ futures down 0.3%, adding to yesterday's losses where Nvidia again was the worst drag on the NASDAQ now for 2 days running, down nearly 3% in the session yesterday. You have to wonder whether this equity market shakeout means the bar has been lowered for these results out later tonight. But the equity market, again, if we look in the last 5 sessions, we're nearing a 5-day losing streak for the S&P 500. The longest route since April. We've lost around 3.6% off the S&P 500 index in that time frame. Now, Tom, this is, again, something to point out here that seasonals are normally quite positive in the month of November for the U.S. equity market. So again, this is something we're not essentially seeing come to fruition. Whether or not we do turn November's drawdown maybe into a Santa rally could all be dependent on Nvidia and the results tonight. Could also be dependent on what we hear from the White House. We had Scott Besset yesterday speaking to Fox News, teasing the fact that we could hear this Fed chair before Christmas. He says that after Thanksgiving, there are going to be a narrower list of candidates presented to President Donald Trump for his final round of interviews, and they're hoping to make that decision before Christmas. As we know, Governor Chris Waller is in one of the front seats. Kevin Hassett is also someone who's been really spoken about, one of the key pillars to Trump's economic agenda. But this could really be telling about where we close the books up in December, whether the market takes this new Fed pick well from the White House and the Trump administration.
Yeah, of course, Chris Waller recently calling for another cut in December from the Federal Reserve. Traders split on whether or not the Fed will go next month. Bloomberg's Valérie Teitel, thank you very much indeed. On the back, of course, of 4 days of losses for US and European stocks, as Val was saying, and as the futures picture suggests, a 5th straight day of US losses, if that holds, of course. Now, the next major test, and this will be part of it for the markets, will be third quarter earnings from the world's most valuable company, expected to drop at 9:20 p.m. UK time. Let's get more on Nvidia with Bloomberg Intelligence analyst Matt Block. And Matt, what are you looking for? What are the forecasts?
Yeah, so for the quarter, people are looking for about $55 billion of revenue, which should be up kind of 56 or 57% year on year, and about $1.26 of earnings. I think more importantly, people are going to be looking to the forward quarter expectations. I think the market's looking for just over about $62 billion of revenue, which again would be a kind of 56, 57% year-on-year growth. So that's kind of where the expectations are. I think historically we've seen Nvidia typically do better than where the market is. So I think that will still be the kind of the mentality going into this. And also, lots of questions about, the circularity of demand and this recent deal they've done, yesterday with Anthropic and Microsoft. Yeah,
just the latest reminder that they're leaning into these partnerships, and even if those measures and those deals cause some concern, how do they then, specifically on the question of the spend around AI infrastructure, kind of assuage those concerns?
Not very easily, probably is the straight answer. And I think if you look at it, these big hyperscalers like Microsoft and Google and a few others account for about 40% of their total revenue. Those companies are committed to very big capital expenditure budgets this year and next. And so that's where a lot of their revenue is coming from. I think that what they need to do is convince people that what I would describe as the natural demand, enterprises spending on AI technology, really transforming their businesses. Consumers may be paying $20 a month for a kind of the ChatGPT kind of services. That's what we need to see. That's almost like in a chess game, 2 moves ahead. And I think that's where the market is now looking, and they're looking for kind of conviction that natural demand is coming through. Because next year, if you start to not really see, like for Meta and for Google, the benefits of that big capital spending plan come through in terms of more advertising revenues, better margins, then there's going to be pressure on their shareholders to kind of pare back the capital spending, and that's where this kind of positive cycle would start to kind of unwind.
OK, so 2026, potentially a key test. Before we get there, of course, Nvidia earnings later today. Matt Bloxham setting us very nicely for what to think about when those earnings drop. Of course, Nvidia front and centre. Matt Bloxham of Bloomberg Intelligence. Thank you. Now to geopolitics. US President Donald Trump says Saudi Arabia's Crown Prince Mohammed bin Salman knew nothing about the murder of Washington Post columnist Jamal Khashoggi. He made the comment as they met at the White House to announce the deepening of economic ties. Trump also designated Saudi Arabia as a major non-NATO ally, while the two countries signed a loosely worded defence cooperation pact with the Saudis, promising to invest in the US.
For the Crown Prince, Your Royal Highness, you're talking about $1 trillion of investment. Could the kingdom continue to do that with oil prices in the mid-60s?
We're going to spend in the short term around $50 billion by consuming those semiconductors for our needs in Saudi Arabia. And with the agreement that we're going to have with the United States of America, that will allow us to focus that consuming power.
For more, let's bring in Bloomberg's John Herskovich. John, what did Saudi Arabia then and the US actually gain in this visit by the Crown Prince to Washington beyond the pomp and ceremony?
Sure. For Saudi Arabia, this visit represented diplomatic rehabilitation for the Crown Prince. It was increased access for security with the F-35 purchases being lined up, and also this non-NATO partnership, and also the ability to procure AI chips for Saudi Arabia's tech industry. Now, this is quite an achievement for the Crown Prince. He had been regarded as a pariah, labeled so by the Biden administration after a CIA report said that he had some knowledge of the murder of the journalist Khashoggi. Trump publicly absolved him by saying that the Crown Prince had no knowledge of this. So for Saudi Arabia, it was quite a major achievement. We had one analyst in a Bloomberg story who told us that the benefits are probably lopsided. The U.S. got this pledge of $1 trillion in investment, but there's no time frame for it. And one thing to keep in mind is that Saudi Arabia's annual GDP is about $1.24 trillion. So it's just, this pledge is a little bit less than what the entire economy produces in a year. The U.S. did gain some access to increase its presence in the Gulf. This is a security partner long-standing. As it looks at the threat from Iran, it often has turned to Saudi Arabia. But there are some things that cause concern. Israel will probably not be happy with the F-35s. It's the only air force in the region that has them. With Saudi having them, it kind of disrupts the balances in Israel's view. And there's also the worry of the leakage of security of the F-35, that perhaps it could go to China. So lots going on, but for Saudi Arabia, it was the major rehabilitation of the image of the Crown Prince.
Bloomberg's John Herskovich, thank you very much. Indeed, worth noting, of course, that US intelligence did determine that the Crown Prince knew about the murder of the journalist Khashoggi and likely also signed off on that. Now, here's what else to think about in the day ahead today, 7 a.m. UK time. UK October inflation, the CPI data drops at 7 a.m. UK time. Really significant as we think about the actions of the Bank of England and what it all means in the lead up to that deeply consequential budget from the UK on November the 26th next week. Of course, at 7 p.m. UK time, Fed minutes for the October meeting. So a little bit more colour in terms of what led to that determination, particularly around the balance sheet and the decision to keep rates on hold. And at 9:20 p.m. UK time, drum roll, it's Nvidia third quarter earnings, and the significance of this for global markets cannot be overstated. Coming up, we're going to be at the New Economy Forum in Singapore. We're going to be joined by the CEO of Euroclear, Valérie Urbain. We're going to get her take on business expansion in Asia. That is next. This is Bloomberg. Welcome back. Bloomberg's New Economy Forum has kicked off in Singapore, bringing together the best of government and private enterprise from across the globe. Francine Lacroix is on the ground for us. Fran.
Thank you so much, Tom. I'm delighted, of course, to be here in Singapore. We talked about fragmentation, but also let's talk about systems, payment system. And I'm delighted to be joined by Valérie Urbain, the Chief Executive Officer of Euroclear. Valérie, thank you for joining us. Look, there's a lot going on in your space. I know you want to expand a little bit in Asia. There's a lot of focus on digital currencies. What are you most excited about?
Well, I'm excited by everything, But talking about Asia, it's fair to say that when you look at the evolution of Asia versus Europe, clearly, I mean, the growth agenda is, you can really feel it when you're in Asia. And so when you see the evolution of Euroclear, 1/3 of our shareholders now are from Asia. And so clearly, we want also to leverage this evolution to continue to increase our market share in Asia. So we are in Asia for 30 years already, enjoying very strong, long-standing relationship with Asian investors. But we also want to continue to develop collateral management services, fund services, so really to broaden the range of services that we want to offer to Asia. The other thing which is also important is also to listen to the needs of the clients in Asia to adapt our own service offering, because service offering is primarily European driven, but very often, there is some slight nuances in the needs of our clients, and we want clearly to be part of that.
I mean, there's a lot of talk, of course, about digital assets, digital currencies. There's also, I guess, a necessity, or certain politicians are saying it's a necessity to get away from the US-based system, or at least have, if not a collateral, something a little bit different. What role will Euroclear play into, for example, digital euro?
Well, digital is something which is coming, so I don't think we can ignore digital. And actually, coming back also, linking it back to Asia, we have also invested in Singapore, in a company together with Temasek, HSBC, which is digitizing all the funds flow in Asia. So just it's an illustration of how we have to incorporate and integrate digital in all what we do. Now, to come back on your question in Europe, of course, the European Central Bank is very keen to develop the digital euro. We have been part last year of all the experiment, especially with Banque de France. We will continue, of course, to work with the ECB on Pontes, which is, the first stage in the digital euro. We have just been also signed a partnership with Banque de France to digitize the commercial paper. And that's a very interesting, I would say, initiative in the sense that we are really working on moving a full market on commercial paper on the chain. So I think clearly, digital will be part of our offering going forward.
One thing I ask you every time we catch up is actually the idea that a lot of the funds that you've seized, or that you have that have been seized from the Russian economy, can they be used for loans for Ukraine?
There are a lot of talks once more. As always, I will always give you the same answers. We are not decision makers, but at the same time, we spend a lot of time to make sure that the decision makers understand all the consequences. For the time being, in the context of the reparation loan, there is a lot of talks about, using those assets as quickly as possible. It's good to focus on short-term objectives, but we also need to don't forget the long-term objectives, especially in the context of the savings and investment union. We also need to continue to ensure that the European markets are attractive and are stable.
Is there anything that you want to see put in the proposal, then put forward by the EU?
There are many things. And I must say, talking with the European Commission, I think they have taken part of our comments in the recent document that has been issued. But it remains very much for the timing and the level of principles. We will need to go really into the details to be able to assess the proposal.
Do you have any concerns now about the EU plan?
There are some serious implications, and so yes, for the time being, we remain concerned on what it would entail for Euroclear, for the European capital markets, for the financial markets in general. Yes, we do have serious concerns at this stage.
Your number one concern?
It's very much the respect of the rule of law. And anything which is looking like a confiscation is something which will deter quite a number of investors.
Okay, Valérie Urbain, thank you so much for joining us, CEO there of Euroclear Group. But with that, Tom, I'm going to send it back to you in London. We'll have plenty more here from the New Economy Forum in Singapore.
Fantastic, Francine. Thank you very much indeed. Bloomberg's Francine Lacquart, of course, at the New Economy Forum in Singapore. Lots more coverage, as Fran was saying, from that event throughout the day. Stay with us for those conversations. Coming up, a warning that the EU's reliance on China is weakening its leverage over Beijing on Ukraine. More on that next. This is Bloomberg. The EU's top diplomat says the bloc's deep economic ties to China are holding back its ability to pressure Beijing to use its leverage with Russia over the war in Ukraine. Kai Kallas was speaking to our Brussels bureau chief, Suzanne Lynch.
I would use the wording of NATO that says that Russia, like China, is the key enabler of Russia's war in Ukraine, which means that if they wouldn't support them, then this war would be already over because, all the sanctions, they don't have access to capital, they don't have access to, different things that are under sanctions unless they have, friends who are helping them. What we have been calling, China, who says that they want good relations with the European Union. We have been always raising this, that this is, we have two big concerns. One is their support to Russia in this war, and the second one is their economic coercive practices against our companies. Now, what my feeling is that China is listening to us, taking note that we are raising these issues. But as we are maybe not united how we should react on this, because countries have different relations, then we are not taken seriously enough. And if you take the numbers, regarding China, over 50% of world's chemicals come from China. Critical raw materials. We just saw the weaponization of the access to critical raw materials. Electric batteries, electric vehicles. The list is long. All of the countries, United States, UK, European Union, Australia, Canada, Mexico, India, Japan, South Korea, all struggling with the same issues. Now, the problem is that we are not acting united here. If we would have economic Article 5 alliance that, if these coercive practices are used against one, then all the others take the front that this is not okay. But and also on the European level, that we are united in this. But, of course, China is quite clever in, divide and conquer type of, relations that, still countries think that we can negotiate better terms. But actually, the honest truth is that we are strong when we are acting together. And then we are also taken seriously. If we say these things, we act as a geopolitical power. If you don't, take steps to mitigate our worries, then we also have a strong response.
The EU's top diplomat, Kaja Kallas, speaking with Bloomberg's Brussels bureau chief. Now to some of the stories making the news. The US Senate is moving to clear a House-passed bill forcing the Justice Department to release its Jeffrey Epstein files. The House approved the measure 427-1, signalling strong bipartisan support despite President Trump's earlier opposition. Trump has since relented, though he could still delay the release of some documents. And at least 13 people have been killed in an Israeli airstrike on a Palestinian refugee camp in Lebanon. Israel says it targeted a Hamas training compound and took steps to limit civilian harm. Switching focus, we will be live in the next couple of minutes from the B20 in Johannesburg. Stay with us for that. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Stocks remain on the back foot after a sell-off that's wiped $1.6 trillion from global equities. Investors now look to today's earnings from Nvidia for a health check on the AI boom. President Trump describes Saudi Arabia as a major non-NATO ally as the Crown Prince makes a vague pledge to invest $1 trillion in the US. Plus, with UK inflation expected to ease, we're going to look at the implications for the government's budget due 7 days from now. To the markets then, 4 straight days of losses. 4 straight days of losses for European and US stocks. The picture turning modestly, very modestly positive for the European futures space after losses of 1.7% yesterday for the European benchmark Stocks 600. Losses of 1.2% for the Nasdaq 100 and a drop of 0.8% as well for the S&P today. Things are moderating somewhat. Nvidia, of course, is the big event for these markets. European futures then modestly high, up 3 points. FTSE 100 futures looking to add 10 points. S&P E-minis a little softer, down 0.1% after the sell-off yesterday. And Nasdaq 100 called lower by 39 points. Let's split the board and have a look cross-asset. Treasuries relatively stable in the session today. Bitcoin is drawing our attention once again, given the sell-off there. So let's get you a print then on the 10-year, 411 right now, largely unchanged on the benchmark US 10-year. We're going to get FOMC minutes out for the most recent meeting later today. That will give some detail in terms of the decision-making at the top of the Fed. Euro-dollar at 115, close to 116, a little bit strong on the single currency in the session today, up 0.1%. And Bitcoin just clinging above $90,000 per coin, having dropped below that earlier in the session, down close to 1.8%. And Brent oil prices a little softer as well on an inventory build-up in the US, down 0.3%. Now, the B20 kicks off today in Johannesburg, the business engagement group ahead of South Africa's G20 summit. Development Partners International is a leading private equity firm focused on African investments, managing $3 billion across its funds. Let's cross over right now to Jen Zabasaja, who is joined by their CEO. Jen.
Yeah, that's right, Tom. I'm joined by Runa, who is the co-founder and CEO of DPI, a part of the B20 congregation that is here to speak about some of the opportunities and potentially some of the challenges that still lie ahead for the equity space across the continent. Let's just start with one of the portfolio companies that we just saw IPO in Johannesburg, Optasia. It was one of your portfolio companies. Can you talk to us about how that maybe speaks to the investment landscape across the continent right now?
Absolutely. So Optasia was IPO'd about 2 weeks ago here in Johannesburg. It was a 5 times on our money, so a 5x in dollars, which was excellent. And we were able to sell the whole amount of our stake because there was so much demand. So it really speaks to the fact that Africa has changed this year. So we couldn't have done this IPO 5 years ago. So we have been in Africa on a cycle with the dollar going up over the last 15 years and EM currencies, including African currencies, declining and having some macro issues in inflation and so on and so forth. That kept our stock markets closed, and it also meant the stock markets were flat. This year, the 5 major stock markets, including Johannesburg, have been up to 40%. That opened up the window for IPOs. We also did an IPO last year in Morocco, which was 37 times oversubscribed, which was CMGP.
Runa, do you think then this sort of speaks to, are some of these equity markets able to withstand some of the uncertainty that is afflicting other markets elsewhere? I wonder how you see that dynamic playing out.
Well, I think working on this continent, it's actually one of the best places to be an equity investor right now. 4% of the continent's exports are to the United States. So it's very much delinked from some of the global geopolitics, some of the global tariff issues. And so that means the continent, most of the countries, have been able to grow this year between 3% and 5%, 8% in Senegal. And that means that as an equity investor, we benefit from that growth and some of the stability.
Where do you look to then next? We talk a lot about globally, some of the tech, obviously the Mag 7, Nvidia, we're awaiting. Is it the same trends that we're seeing on the continent in the Johannesburg Stock Exchange, Nigerian Stock Exchange? Where are you as DPI seeing potentially the most opportunity?
I would say exactly what you said is the trend we're seeing, which is digitalization, and then now some AI coming in. And so across our whole portfolio, we have digitalized. We have taken microcredit, traditional companies, and they've become fintech. M&T Holland out of Egypt, a unicorn out of Egypt. We do embedded finance, even in a specialty chemicals company. And then we have invested straight up companies like Optasia, Moneypoint in Nigeria, Weaver here in South Africa. And so for Africa, the fundamental difference is what we're seeing around the world is coming into Africa, lack of legacy, so actually a bigger impact and faster growth in revenues and EBITDA out of the digitalization.
Some of the same concerns, though, when you speak to investors about AI, are they playing out here or maybe in a different sense?
So we have a venture capital fund called Include, but AI is in the early stages here, so we haven't seen that play out. But again, I would emphasize the digital and tech that is developing in Africa is not a me too and just efficiency. It's fundamental when you don't have legacy. It can lead to unblocking trade. It has fundamental impact on the economies, on development. So I would say the companies that make it are actually going to be very fundamental to the growth and so more stable, on the digital side. AI just starting. Let's have a conversation 2 years from now.
Fair. And very quickly, Runa, I was speaking yesterday, and one of our guests had said it's not necessarily about some of the IPOs that we're seeing here, some of the exits. What does the pipeline, though, look like for the private equity space here on the continent? What would you say is sort of the barometer of success?
Yeah. So as you know, distributions and exits are down globally. Last year it was down 65%. Going up a bit, but down globally. Here in Africa, we have really emphasized, and it's uneven across different portfolios. On our portfolios, we actually restructured internally to focus on exits, and that has had an impact. We returned $400 million last year, and there'll be another $400 or $500 million this year. So there is a pipeline, and the IPOs will happen again in Morocco, possibly here, and then in the Middle East. So Abu Dhabi and the Saudi Stock Exchange are, for our Egyptian companies and North African companies, a very good place to look for exits. And of course, strategic buyers and financial buyers are also there.
It's a fascinating landscape that we're faced with. Thank you, Runa Alam, so much for being here. She's the co-founder and CEO of DPI. Tom?
OK, Bloomberg's Jennifer Zabasajja, thank you very much indeed. At the start, the opening day, of course, of the B20 summit in Johannesburg. We're going to have continuing coverage of that summit and the G20 in South Africa, including interviews tomorrow with the chair of Standard Bank Group and the CEO of Business Leadership South Africa. Meanwhile, South African billionaire Jonathan Oppenheimer has told Bloomberg he believes the UK is uninvestable. Oppenheimer, whose family built up Anglo-American and De Beers, cited economic mismanagement and long lead times for his lack of confidence in the UK. His comments were echoed by the CEO of the financial services firm Signia at the Bloomberg Africa Business Summit in Joburg.
They've got this is an 18-mile stretch of road where they want to move it from single carriageway to dual carriageway. And the UK system is going to take 30 years to do that. I could, if I was allowed to build it in 9 months. So long as the UK takes 30 years to do a 9-month project, it's uninvestable.
It's an economy that has completely been destroyed, and because Labour has just come in, we're looking at, 4 more years of this mismanagement of the economy. A scary country, wouldn't touch it with a barge pole. As I said, I find South Africa so much more interesting.
Jonathan Oppenheimer and Magda Vierskitska speaking to Lizzie Burden at the Bloomberg Africa Business Summit. The UK government, of course, is simplifying its planning regime with 20 major infrastructure projects approved in Labour's first year in office. Just worth noting on the back of those comments. Now, it is UK inflation day. Bank of England chief economist Hugh Pill says price pressures are not as strong as headline inflation estimates suggest, but he maintains that policymakers should not cut interest rates again just yet. The markets are pricing a December cut from the BOE, but that could change on the data today. Let's bring in Bloomberg's Markets Today co-editor Kit Rees, who's going to be looking at this for us closely. So there's a lot of attention around the inflation data dropping at 7 a.m. UK time. Where is your focus going to be? What are the forecasts?
Yes, so basically we're going to be forecasting on the big drivers of what it could be bringing inflation down. So the big debate is whether September really was the peak. So today is going to be proof of the pudding to see if inflation could be coming down. So the big thing for consumers, and also that the Bank of England is watching, will be food prices to see if these have been coming down, and broadly also services inflation, because the UK is a very big services economy. So things like buying a plane ticket, train fares, getting a haircut, these are all really important for consumers. So if this is coming down, then it shows that businesses have adjusted, that we hopefully have gone past this sort of peak pain period, and that the Bank of England strategy of keeping interest rates on hold is filtering down. So we're going to be watching a lot of things, and hopefully this will be kind of evidence, and it might also allow the Bank of England to cut interest rates going forward too.
Yeah, and to your point, services, the services component has been sticky, hasn't it? Well above 4%, above 4.5%. When it comes to that read across then to the BOE, but also to the Chancellor and the budget next week, how we should be thinking about that?
Yes, so if we do see inflation coming down a bit, it will probably be a lot of relief for Chancellor Rachel Reeves. Inflation, the cost of living crisis, has been very salient for households. It's very hard to plan if there's no kind of visibility on where prices might be. So, and she has also pledged to tackle this in the upcoming budget, which is the big thing that we're going to be watching too in the whole country. So it would be a relief for her. And in terms of the Bank of England, the votes on the interest rate cuts have been very close. They've been very divided. So perhaps if we see that this trend of falling inflation is kind of settling now, it might give them more confidence in how to proceed further. And as you said, markets have been pricing in a rate cut in December, and today's data is one of those big kind of proof points that we need in order, and that the Bank of England officials will be watching in order to see how their decision carries forward.
OK, the forecast for today, for the month of October, 3.5%, below 3.8% from the previous month, so 3.5%, 3.5% year-on-year. CPI is the number we can be looking for. Kit Rees, thank you very much indeed. A fantastic setup for an important day today out of the UK and the implications to the BOE and the Chancellor. We want your questions as well, because you can join Kit Rees and the Bloomberg Markets Today blog for a special UK budget Q&A at 11 a.m. London time. That is today. They're going to discuss what could be in store, what it means for your money. Send your questions to Markets Today at Bloomberg.net. And UK Chancellor Rachel Reeves is expected to deliver her budget at 12:30 p.m. London time next Wednesday. Viewers in the UK and Europe can join us for full coverage and analysis on the day. Coming up, we're going to look ahead to Nvidia's earnings with VC investor Jack Leeney and look at how warnings of an AI bubble compare with the dot-com bubble of the 90s. That is next. This is Bloomberg. OK, the major market event of the day, the week, arguably the month, Nvidia's earnings due after the bell will offer investors a health check on the state of the AI boom. Joining us now from New York is Jack Leeney, co-founder and managing partner at 7GC & Co. for a perspective on this AI boom and the Nvidia story with portfolio companies including Anthropic, Poolside, FluidStack, and a number, of course, of successful recent exits and IPOs. Jack, what are you and the team going to be scrutinising when it comes to Nvidia earnings? What for you is front and centre that you're going to be looking at from these numbers?
Thanks, Tom. Without a doubt, look, I think it's the expectations are huge this quarter. Obviously, anything that's not beat and raise and higher than guidance will most likely be disappointing. And options markets have up to kind of 7% volatility on each side priced in. So, you know, this is a company that has tremendous net income margins, gross margins. Anything that's not showing this kind of 60% year over year, and about, you know, what's more meaningful to me is 15% quarter over quarter growth will probably be viewed as disappointing. But, you know, I think what is most important to really look through what they hint at and what could represent, some softening in what is, a true monopolistic player in this new market. They're over 90% of the market for data center usage of GPUs is first and foremost, they are the bellwether for all CapEx and AI infrastructure. So are there new Blackwell chips ultimately supporting these ASPs, which means not only, does demand maintain for their market share, but ultimately customers are demanding, the bleeding edge and willing to pay for it. And, we can model CapEx backwards for it with those companies paying for it. And then also, look, I think that the China piece will be relevant if the policy changes are, really kind of starting to make a material dent here.
Given what you've seen and what you learn now, what is your level of conviction that demand for the chips that Nvidia produces is going to be sustained through 2026?
I think in the near term, the reality is they're just leagues ahead anyone else. When you look at AMD, keep in mind this is kind of stale data, but it's worth thinking about. AMD used to have 20% of the GPU market, and they're kind of low single digits now, sub 10%. This really is Nvidia's game from the reference design, head and shoulders above anyone else. There's a lot of talk about OpenAI doing deals with AMD and potentially Broadcom, but I think where there is, the general trend is onwards and upwards, and we know CapEx is scheduled to increase across the board next year. But what'll be far more interesting for us to see, and it's harder to understand, is when and how Google's TPU chips come out at scale, and then ultimately Amazon's behind them. And I think from my estimation, that could have much more of a kind of 26, 27 impact versus the players we already know about today and who could potentially unseat or take real market share from Nvidia.
Okay, interesting. So maybe more about the TPUs from Google and Amazon versus AMD as the competitive threat. Jack, when it comes to what some describe as circular funding, when it comes to the AI infrastructure story, how comfortable are you? I mean, given that your portfolio companies include the NeoCloud, Fluidstack, that's benefiting from some of this deal making, and Anthropic as well, most recently with this deal between Nvidia and Microsoft. What is your level of comfort on these deals?
Yeah, no, it's a great point. It's talked about often. I think, ultimately where we are is we really only have one person to buy these things from at scale. And they have, 55% net income margins and the strongest balance sheet, kind of historically to support whatever deal making that they want to do. So a lot of the headline numbers of these deals are huge, a 30 billion cloud, a sort of 30 billion purchase of capacity and gigawatts on gigawatts. And what's left out of the headline, first and foremost, is these are 10 or 15-year deals. And secondly, as it stands today, Nvidia really is ultimately who everyone here is dependent on. So look, I think it's something to continue to pay attention to. But frankly, the balance sheet of the company who's propagating a lot of this is so strong, it doesn't give me a huge amount of pause.
Do you see, Jack, froth and bubbles in this AI ecosystem, and if so, where?
We do without a doubt. I mean, look, multiples broadly defined are priced to perfection. We've had a huge run up just since the second quarter this year. In private markets, more of the kind of expensive activity, I think, is going on at the app layer and the agentic things. As this kind of trickles its way into the real economy, so some more there. But there's also, frankly, when you look at the scale of the revenue of infrastructure and platform providers, public and private, I think the revenue scale is tremendous, and the unit economics and the margins kind of continue to pull in the right direction.
When does this become a real economy story, Jack? We have, to your point, we had that report out from Bain suggesting there's an $800 billion gap between the CapEx spend and the projected revenues, and that gap needs to close if for all of this to make sense. When does this become a real economy story?
Yeah, it's a great question, and it's really crucial to understand kind of where we are in the cycle, or how to ultimately monitor CapEx spend. And from the data we're seeing right now, if you look at the enterprise adoption of AI, there's something like 60% of companies using it. And I'm sure the Bain report would be similar to this. Something like those 60% of companies are in the experimental phase in some way, shape, or form. About 10% of enterprises are actually using AI, in production at scale. So there's the kind of key things that need to happen for us to have this balance and be able to understand how much more CapEx is truly needed is one, core adoption as we see this move out of IT and developer environments, but into the real economy and into, companies across sector using this at scale, using it to push product. And then the other key thing that's really crucial to monitor is the efficiency of the models that are ultimately powering this. To run what was the state-of-the-art model a year ago, required 3 times the compute it does today. Now, the models keep getting better, but ultimately, where is the efficient frontier?
Jack, very briefly, before we let you go, does Anthropic, your portfolio company, list an IPO in 2026?
Oh, man. TBD. You might know better than me.
OK. Jack, brilliant. Thanks for your insights. Really appreciate it. Jack Leeney, co-founder, managing partner at 7GC & Co. Plenty more coming up. Stay with us. This is Bloomberg.
Some people in the White House will be doing interviews probably right after Thanksgiving. Mid-December, the president will meet the final 3 candidates and hopefully have an answer before Christmas.
US Treasury Secretary, of course, Scott Besset on the interviews and the potential names for the Fed chair. We're going to be getting, before all of that, the Fed minutes from the October 28th, 29th meeting. We'll get a bit more colour in terms of what was, of course, a division amongst FOMC members on that decision. They held, of course, in the most recent meeting. Markets are pricing at about a 50% chance that they cut in December, so that will all tie into that decision-making, at least expectations around the Fed. Also, the debate around the balance sheet runoff as well, that decision, or at least that action coming on December the 1st. So the colour and the details from those FOMC minutes dropping later today will be in focus. Really, the big one for the markets is Nvidia, though. Let's flip the board and have a look at some of the estimates for the most recent quarter. Third quarter revenues expected to come in, totally, as a group, 55 billion, just from the data centres, and this is all about AI and the Blackwells. 49 billion is the estimates, up 60% year on year. But will that be enough if they meet that metric to satisfy those with those stretched expectations? A gauge in terms of that AI demand, the infrastructure spend and how it's feeding through to the Blackwell, with, of course, Jensen Huang projecting they could get, let's flip the board, up to $500 billion of Blackwell sales in the next few quarters. $500 billion of Blackwell sales. That's their most recent chip, and the Rubin as well, which is coming down the line. They haven't started shipping that one yet, but that's their most recent, most up-to-date chip, which will come online probably early next year. But that number, 500 billion, look at that, more than 5 times what they sold in total, the whole lifetime of the previous chip and GPU, which was Hopper. So Nvidia, of course, central to the market action today. We're going to be speaking, by the way, the CEO of software group Sage after they released their latest results. So that conversation starting at 7:30 a.m. UK time on the opening trade, which is up next. This is Bloomberg.